Hi guys. Today we will analyze Berkshire Hathaway stock, and calculate its intrinsic value using 3 different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. Also recent evolutions are not positive. The long-term trend is neutral, but the short-term trend is negative. Strong support levels are around $291 and $274. Next strong support levels are around $235 and $222. Strong resistance levels are around $310 and $323. Next strong resistance level is around $360. In the last month the stock has been trading between $291.60 and $319.20 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 4.2 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since March 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use 3 different valuation models to calculate the intrinsic value of the stock. The excess return model. This approach is used for financial institutions where free cash flow is difficult to estimate. Then, valuation based on earnings per share, EPS, 5-year average P/E ratio and expected growth rate. Then, relative valuation using price to book value and price to tangible book value. First model. Excess return model valuation. This spreadsheet contains some financial data that we will use for the stock valuation. In this valuation I will use margin of safety. 30%. Once we actually figure out what we think this stock is worth, we are only going to buy the stock if it gets 30% of what we think it's worth. It gives us a big margin of safety if our predictions are wrong. In other words, when something is worth $1, I want to pay only 70 cents for it. I want to be conservative with financial institutions. So, my margin of safety is 30%. According to our formula, the fair value of the stock is $976.57. When we apply the margin of safety to that value, the fair value of the stock would be $683.60. That's the price that I may want to pay for this stock. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for Berkshire Hathaway is 37.02. Minimum rate of return. I will use 10%. Because when we invest in individual companies, we are looking for a higher return than the S&P 500. For Berkshire Hathaway, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 22. I will use 3 different scenarios for Berkshire Hathaway Company: bad, average, and good. First scenario. Berkshire Hathaway will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 3%. Future P/E would be low, 9. In this case, the fair value of the stock today would be $184. Second scenario. Berkshire Hathaway will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future P/E would be average, 11. In this case, the fair value of the stock today would be $246. Third scenario. Berkshire Hathaway will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 5%. Future P/E would be high, 13. In this case, the fair value of the stock today would be $317. As you can see, today the stock is fairly valued, $291, if we expect the company's high performance in future. Third model. Relative valuation using price to book value and price to tangible book value. This spreadsheet contains another financial data that we will use for the stock valuation. According to our formula, The minimal fair value of the stock is $214.24. And the maximum fair value of the stock is $268.82. The fundamentals are good, but the company is expected to show a small growth in revenue in the next 5 years, 6 to 8% yearly. Also, the stock has been in a downward trend since March 2022, and it can go lower before it recovers. According to our 3 valuation models, we have 3 different values: $683, $317, and $268. So, the stock looks fairly valued at the current levels. However, I would like to wait until the stock drops below $268 before buying the stock, to be on the safe side. Keep in mind that there are 2 Berkshire Hathaway stocks. Berkshire Class A, ticker BRK.A. It traded at $439,780 on last Friday. It gives you more voting rights. Berkshire Class B, ticker BRK.B. It traded at $291 on last Friday. It gives you fewer voting rights. Each of the larger Class A shares may be converted at any time into 1,500 shares of Class B stock, but Class B cannot be converted into Class A. Although Class B shares have 1/1,500 the market value of Class A shares, they have only 1/10,000th of the voting rights of Class A. Company strengths. Berkshire Hathaway is an American multinational holding company with subsidiaries in a diverse range of industries, including insurance, railroads, utilities and energy, finance, manufacturing and retailing. The company wholly owns GEICO, Duracell, Dairy Queen, BNSF Railway, Lubrizol and other companies. The company is known for its control and leadership by Warren Buffett, who serves as chairman and chief executive, and Charlie Munger, the company's vice chairman. Berkshire's decentralized business model, broad business diversification, high cash generation capabilities, and unmatched balance sheet strength are true differentiators. Berkshire is among the few stocks that are poised to do well from an earnings standpoint, if inflation continues to rage. Berkshire's unique mix of assets makes it a good holding for this uncertain market. Book value per share, which is a good proxy for measuring changes in Berkshire's intrinsic value, increased at an estimated 18.7% compound annual growth rate during 1965 to 2021, compared with a 10.5% return for the S&P 500 index. The company's profit margin of 30% and return on assets of 8.6% are amongst the best returns of the industry. The company has a return on equity of 17.5%. This is comparable to the industry average of 14.5%. Risks. Succession planning is important, given the advanced stages of top management. Warren Buffett and Charlie Munger are 91 and 98 years old respectively, and have been major factors in the company's success. Other risks facing Berkshire include large catastrophe losses related to natural events, reductions in coal volume at Burlington Northern Santa Fe, the continued loss of subscribers at the company's newspapers, and the impact of e-commerce on the company's retail holdings and some of its consumer brands. Political winds also bear watching, as the company's substantial insurance and financial services holdings could come under pressure from various efforts to regulate those industries. Berkshire's insurance business faces competitive and highly cyclical markets. Many of the company's non-insurance operations are exposed to the cyclicality of the economy, with results suffering during economic slowdowns. Given its size, Berkshire's biggest long-term hurdle will be its ability to consistently find deals that not only add value, but are large enough to be meaningful. Berkshire is exposed to foreign currency, equity price, and credit default risk through its various investments and operating companies. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 6 to 8% on average per year. The earnings per share is expected to grow by 12% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.